You are in the middle of a massive takeover bid from BBVA to the tune of 17 billion euros in a revised takeover offer. Now, we know that the Sabadell board has rejected this BBVA offer.
Correct.
It is now up to the shareholders, your shareholders. You've flagged a series of risks of why this deal is not enticing enough. You've talked about the fiscal impact. You've talked about shareholder dilution. You've talked about risks to the labor force. I'm sure there's plenty of others I'm missing. Walk us through what you think is the biggest one to be aware of.
Well, I think the first reason is to explain why we don't think this offer makes sense. No? So to begin with, it's not priced. And it's not priced because they are offering us even a worse deal than they offered 16 months ago. They offered at that time 16.2% of the combined holding. Now they are only offering 15.3%. But furthermore, the value of their stock has been the worst performing for the last 16 months of all the European stocks. So the currency that they have to pay us in relative terms has worsened dramatically. We have gone up, we have almost doubled, in line with the Spanish banks. And BBVA is the worst performing Spanish bank and clearly below during these 16 months versus the European average. So it's not a good deal. That's the first risk. If you go into a bad deal, that's the first risk. But then, and we can talk about that at length, and by the way, I'm talking to all investors these days because we are in London, and they clearly see that it is impossible to get to the 50% acceptance in the first offer. And that opens a tremendous complexity because there could be, and that would be the decision of BBVA, of having a second offer that would bring lots of risks.
Let's take that piece by piece. We'll start with the stock price. You make this argument often. The BBVA stock price is under pressure because, as with any M&A deal, they always take a hit because of the potential acquisition. That being said, the offer is still higher than where Banco Sabadell is trading in the markets right now. There is still a premium for shareholders who want to take it. 1%,
2%, 3%.
But a premium nonetheless.
Yeah, well, that premium is eroded just by the fact of the trading on a daily basis. And I make that point, but it's not because BBVA is under pressure because of the deal. It's under pressure because Mexico has clearly underperformed. The Mexican stocks, compared to 16 months ago, they are 16% down, while the Spanish stocks are 80 to 90% up. And that's why the underperformance of BBVA, it's not the deal, it's the structure of their businesses, which is 70% in emerging markets. Sometimes that helps, sometimes that doesn't help. In this case, it hasn't helped at all.
As you point out, is a function of the geopolitical volatility that you're seeing. You mentioned the 50% threshold that they are trying to get to. From your perspective, and you've said in the past that it is impossible to get to the 50%. Do you think that they'll lower that threshold? They have the legal ability to. Do you think they will?
I think there's a high probability that they will, but of course that it's only for them to say. But their persistence, sometimes beyond what was expected in terms of continuing with this deal, tends to show that it might take them to make the decision even if they are in the low 30s, if that would happen in terms of acceptance. And the 50 is unattainable for a very simple reason. 40% to begin with. This is the major argument. There are others. More than 40% are retail. If you wanted to know the acceptance level up to today, it's below 1%. And those don't do it the last day. They do it in a gradual manner, and they have been doing it into a gradual manner over the course of the days, and they remain still below 1%. The 80% of which we have knowledge, which are at the same time our customers, and at the same time our shareholders with more than 15 years of average tenure of our shares. And those are not going to tender. And then, of course, we all know the composition, and we are sharing it with the market, and the market has come to the conviction that reaching the 50% is impossible. Furthermore, they said that they would never go below 50, and now they have opened lately that possibility, and they acknowledge that reaching the 50 is very difficult just by their own actions. They have lowered the threshold to 30.
They have said that that is a possibility. They haven't actually made that change just yet. At the moment, the threshold is still 50. But to your point, they do have the legal ability to do so. Let's explore the hypothetical scenario that were they to move that threshold lower to 30%, include that second takeover offer. Is there a price in mind of what that second takeover offer would be?
There's a huge discussion. What there is certainty is that there is uncertainty of what that price would be. What the chairman of the CNMV, which has the ultimate word, has said is that it will be equal or superior to the first offer. Therefore, waiting has a tremendous incentive, even for those who wanted to tender, because they would have not only a potentially higher price, but furthermore, they would have what in financial terms we call a put, which is the ability to tender in the course of 3 or 4 months at a fixed price. So if the price goes down, they will all tender if this second option occurred, and if the price of Sabadell shares went up, no one would tender. So that means that they would even end up at the low end of the 30s and then have to move through in order to get a potentially higher shareholding, which adds even more risk, or that they might have to put on the table up to 12 billion in cash. That's a ton of money.
Is that a figure coming from the CNMV?
No, the figure of the 12 billion comes from the difference between the amount, the maximum amount that they could come, that they would need. Because if the share price of Sabadell and the market in general, if there was a slight downturn, everybody would have the option to tender at a fixed price. And that would require up to 12 billion of cash disbursement from BBVA. That's a ton of money. Carlos has said that it is impossible that they would require a capital increase. On the contrary, they have reserves on which they can detract the future dividends for their shareholders, but it's not enough. So on top of reducing the dividends, they would have to do a share issue to cover the rest.
Have you spoken to the CNMV about that possibility?
About the possibility of how to set the price, yes. About the other possibility, no, because it is not in their domain. That is more a risk that the ECB would have to consider.
When you talk to the CNMV, about setting the price, have they given an indication of whether it would be at the current level or above?
It is very complex, and they acknowledge themselves, and they haven't decided yet. And they haven't decided yet because the law is very clear. It has to be at the date of the transmission of the shares. That is not the 10th of October, which is the last day of the tender, because then the shares would not have been transmitted. That, in principle, should be the settlement date, which is expected to be around the 21st of October. That is what the direct interpretation of the law would say. And the CNMV is still analyzing what is the best alternative for the market.
You talked about your retail shareholder base. Let's talk about your institutional shareholder base.
Our institutionals are very interesting. 5% is strategic partners. We don't know what they'll do, but in principle, they are with us because of the long-term relationship on an industrial basis. So in principle, those ones we should not count with. Then there's a 20% that is passive investors. And that everybody understands that they don't go in full. They go partially because they want to follow the index. And they estimate what is going to be the tender, and they tend to go along with that. And if anything, they tend to undershoot because it reduces the transaction costs. And then we have 35% of long-only, of hedge funds, and so forth. And there's a significant amount that, from a strategic perspective, still considers that the deal could bring value in the very long term, despite the complexities around obtaining the synergies. And those are divided. But the problem is that even for those, they have the dilemma. Why should I go now and keep that in BBVA shares when those shares might have an overhang in the future because of the potential need of raising or using 12 billion in cash?
Well, Cesar, one of those institutional investors, David Martinez, who was a board member and until recently the largest shareholder of Banco Sabadell, has chosen to take the tender offer. Is he making a mistake?
I think it's not very rational, his decision, but it's a very special type of investor. He's a distressed type of investor. He entered Sabadell when Sabadell was at its lowest. He has seen, since the year 2000, the value of the stock multiply by 12 times. The best performing stock in Europe of the banks, the best performing stock in the Spanish stock exchange, and he has made a very handsome return. For him, taxes are irrelevant, which are extremely relevant for 41% which are retailers, and furthermore, his main businesses are in South America, are in Mexico, he's Mexican, are in Mexico, in Argentina, and other South American countries. So in that sense, he might seem to be more comfortable with that type of risk than the average. He's certainly a very specific type of investor. And let me tell you something. We were expecting that would carry a lot of weight in the investment community. That's not the case. They understand very well that it's a very different type of investor with maybe different motivations.
There is a question in the market of whether he would have a future at a BBVA in the future or a future at a Sabadell under BBVA. Have you gotten any indication that he might be interested in a role like that?
Only what I've read this morning in the press from Carlos Torres, that it's a possibility.
Let's talk about some of the other leadership moves that could happen. In a situation where Banco Sabadell, ultimately, if the deal does get through and these tenders are offered, there's a question of what the leadership of Banco Sabadell would look like. Could that include you?
The probability of that is low, but that is completely irrelevant. What is very relevant is that
you must have thought about it.
Not much. It sounds not credible, I know, and I apologize for not sounding credible when I'm usually a very credible person, but that's not my main concern. My main concern is what would happen to the shareholders of Sabadell, for which we have been fighting for the last 5 years immensely. I'm also concerned about the clients, because I think many will find that the situation in the longer term is not so attractive for them because they have too much concentration in one only bank. But the key thing is that for the next 3 to 5 years, 3 minimum, potentially 5, not much will change at Sabadell, because the autonomy of management and independence of management that has been established by law requires that the brand will remain, that there will be no closures of branches, that there will be no layoffs, and that clients will continue to have their same relationship managers. So from that point of view, in terms of the public good and this transition period, I'm very comfortable that even if they got above the 30%, the 50% is impossible. Even if they got above 30% and they launched the second offer and then they kept control of the bank, things will continue at least for 3 years, potentially 5, in a very friendly way for the environment, which is shareholders, clients, and...
Which would include you at the helm?
No.
So does that mean you are considering a resignation if this does go through?
I think they won't want to count on me, but that's irrelevant.
Well, if that's the truth, I mean, if your perception is that they are looking for one, you must have thought of what that would look like.
I haven't. I promise you that my only concern, and I understand that you don't believe me, and I understand that you press on with these questions, that's not what matters to me.
We look forward to seeing how that shows up if this does ultimately come to fruition. You are faced with that possibility. I would like to ask you to ask me what are we going to do with the bank if we continue going forward? Well, that is literally my next question. Let's talk there. You have promised 2.5 billion euros in some of the banking profits or profitability that you got from the TSB sale to ultimately your shareholders. You've increased your guidance so many times. This year alone, I've lost count. How sustainable is that approach going into 2026? We are a capital generation machine. It's unbelievable, the transformation of this bank. Our return on tangible equity is going to go up to 16, but even today at around 15, it is absolutely phenomenal. And what we are going to return to our shareholders is 40% of the market cap of the value of each share in the next 2.5 years. That gives a lot of tranquility to our shareholders. On top of that, we have an ability to generate capital at a very strong pace, which is higher than the one of BBVA, as we have proven time after time. For example, this year their interim dividend has been at a record. They have announced it with a lot of pride. Our interim dividend for this year in equivalent shares of BBVA versus Sabadell is double.
They are offering the equivalent of 6.6 cents per share. We have already paid out 7, and we have committed to offer another 7.
Cesar, if you're that confident about your profitability and your outperformance at Banco Sabadell,
yes,
then why are you pushing the capital returns so hard? If you're that confident in the fundamentals of your business, you shouldn't need the dividends, you shouldn't need the buybacks, you shouldn't need the payouts to your shareholders.
Let me tell you what one of our investors, a very savvy one, always tells us. We are starting to see some of the banks and institutions all along to focus on capital return and distribution to shareholders.
Yeah.
But what is unique about your case is that you're doing that at the same time as you grow. And we have, again, announced the numbers year to date, up to August, to give the latest information to the market. We are gaining market share, we are growing very handsomely, and the thing is that we can absorb very well that with our capital generation, at the same time remain above 13% core tier 1. BBVA has committed to 12. We have a higher core tier 1, so in that sense we're more conservative, and at the same time we can grow and make these distributions. We couldn't grow faster. We are growing at mid-single digit, that's the guidance that we've given, and it's much higher. And with that, we can at the same time finance the growth and do that. We are not planning acquisitions, we are not planning anything, so it's about growth and shareholder return, and we think that's very attractive.
Well, in the growth and the shareholder return, look at your crystal ball for me into 2026. Can you anticipate the same level and same momentum of shareholder returns as in the next 12 months as you have provided your shareholders in the last 12 months?
Necessarily, this brings the extraordinary return of the sale of TSB.
Yeah.
But what we are showing in our guidance is that we will meet the same levels of profits without TSB in the future, okay? And that means that, of course, you have to subtract from that the income from TSB, you have to add the growth, and that brings us to the next level, but there won't be that extraordinary dividend. But when we look at the ability to generate capital from Banco Sabadell, let me tell you why it is higher than the one of BBVA. Because BBVA has high profit levels, but then it is in very high inflation countries. What does that mean? That their assets grow very much, and they need more capital to fulfill it. And on top of that, their capital, because of the devaluation of the currencies, needs to be devaluated.
Yeah.
So we have a higher ability in a structural way to generate capital than BBVA.
A final question to you. We're going to come full circle here. Do you think your shareholders would still vote not to tender the shares if they didn't have the extraordinary buyouts and dividends and shareholder returns that you're providing for them in this moment?
Absolutely, because it is a structural. You see, what we have done is we've multiplied the value of the bank by 12 times in 5 years. Best performing stock. And we have the elements to continue this transformation on a fundamental basis, and on top of that, we have very handsome returns. You said that we updated our guidance on dividends. We have been updating our guidance for the last 5 years on twice a year, 3 times a year, every time. We are conservative in our projections. We underpromise, we overdeliver.